Hello and welcome to the latest in our series of videos for the Protection Zone. My name is Justin Cash and I'm here today with Mortgage Advice Bureau's very own Andy Walton to discuss how mortgage advisors are really working hard to drive the protection conversation forward and what read across we can have to the more traditional wealth advisors out there looking to put processes in their firms to make sure protection doesn't fall through the cracks. Andy, thanks so much for coming in today. Really appreciate it.
It's a pleasure. Good to be here.
Let's just start with a brief overview of how you do things at MAB and what processes, what steps you think work in this protection journey.
Okay. I think the key word that you've already said there is process. It's absolutely critical that advisors do have a process. It's also critical that they don't predetermine outcomes and that the process is followed all the time. We do see, to be fair, that even when advisors do have a process in place, it might be a very good one, there's still the danger that they might predetermine what's actually happening. So they might think to themselves, well, this customer's too old, this customer's too young, this customer said no to me 2 years ago, so I'm not going to have the protection conversation. And if nothing else, I would say, get your process right and do it every time. Don't predetermine the outcome. But I guess you're also asking, well, fine, what is the process that we follow? So we don't sort of say you have to follow exactly what I'm going to tell you, but we've had a look to see what we've seen work. And we say, look, this is really, really good practice. This is a process that does flow, does work with customers. So I can briefly, if you like, run through that with you. If you think about it, there's really going to be no customers probably that knock on the door that say, please, can you sort my mortgage and all of my protection needs? It just doesn't happen. Neither would somebody in the wealth world say, can you sort out my investments? And by the way, can you look at my protection as well? It would be 1 in 1,000 probably that does that. So somehow or other, we need to put on the agenda the importance of talking about protection. But equally, customers probably don't want to talk about insurance and protection. So how do we sort of start the journey?
It's almost a checklist that you can go through. Okay, I've considered this for critical illness, this for IP, this for life, whatever it is, to aid the conversation.
I think that's right. You've got to have the sort of a bullet point list in front of you. One of the interesting things is that we find that actually talking about product can be off-putting because we've spoken to customers who say, I don't even know what income protection is. So I don't even know what critical illness is really. And even just the word protection can confuse some customers. So we've sort of tried to get round talking about product, but still getting it on the agenda at the beginning. So in terms of our positioning, the way that we say that we perhaps should approach it with customers, at the very, very start of the appointment, we would say, Mr. Customer, I'm a specialist in sorting out mortgages. You've come to me for a mortgage. That's what I'm specialist in sorting out. We deal with these lenders, these products, and so on. I'm also specialist at helping you to ensure that you can keep up the repayments on the mortgage once we've sorted it out. To start with, we'll have a look at the mortgage and see if we can get that through. And a bit later in the process, we'll just make sure that you can keep up the repayments on that mortgage as well. Is that okay?
Yeah.
And in positioning it in those terms, there's very few customers that will say, look, sort my mortgage, but I don't really care about keeping up the repayments on it.
When we go back to that kind of process issue, where do you draw the line between doing a full review of someone's existing protection needs to see if anything's changed and just trying to get them through the process as it is? I mean, a lot of people, particularly in the wealth world, come to me and go, well, my client's already got sufficient protection. How much work do you have to do to check whether or not that's actually true?
Well, it's a good point. And there is quite a lot of work potentially involved, isn't there, in looking at what they've currently got. If you converted that into the remortgage world, where perhaps you're just looking at replacing an existing mortgage product with another mortgage product, again, we would say to advisors it's really important to position at the outset that this isn't just about looking at your mortgage product and and giving you the right mortgage product moving forward, because this deal's coming to an end. It's also important that we look at any protection, any insurance in relation to that mortgage to make sure it's still fit for purpose, that it's absolutely up to date, that it's got the very best chance of paying out. And therefore, we'll review any insurances that you've got at the same time. Again, we would always say, is that okay? And as soon as you get the agreement that the customer says okay to these things right at the start, the door is opened. It's very difficult for a customer to come back and say no later on. But if they feel there's a curveball coming in later in the process, they'll smell a rat and say, look, I'm not interested in that. But yeah, you're right. We do need to look at their existing policies. We should be looking at whatever they've got to make sure, is it fit for purpose? Is it up to date? Because it's amazing how much products have changed over the last few years, isn't it?
So how do you measure the success of those conversations that you're having? Is it, policies per person? Is it the amount sold by particular advisors, the amount referred to specialists? What data do you need to accurately measure that?
Well, that's interesting, because the MI on the back of all of this is critical. We have to know what it is that we're doing, and there's some key matrix that we will look at every single time. So from a mortgage point of view, first base will be, well, what are they spending on the mortgage versus what are they spending on the protection? And we look at the percentage spend on monthly premium on protection versus what they spend on mortgage, and we're currently running at about 13.5%. And that seems to be a figure that we're pushing up gradually, because it was down at about 8%. And it gives us a handle then on the customer's buy-in to it all, because it's all very well saying there's one policy against a mortgage, but it might be £10 a month life only. Well, what good is that potentially?
But in the same way, if you take that to the extreme, would a target make any sense in this market? If you say we want that at 20% instead of 13%,
exactly,
whether or not it's suitable for the individual client, how do you match those two ideas together?
Yeah, well, clearly customers have got their own affordability, haven't they? And we have to take that into account. But if a customer says, and many of them do, well, once we've gone through, the whole journey with the customer to help them understand the risks and the needs, which we haven't really gone through, but there is a whole journey that you can get the customer thinking about, they quite often say, well, what's it going to cost me? And as a general rule of thumb, we say between 10 and 15% of what you spend on the mortgage is what it potentially costs you on the protection side. And then we convert that into numbers. So we'll actually say, so you're paying £950 a month on your mortgage, therefore between £90 a month and £125 a month is possibly where it comes in. Still need to do the research, but where do you come within those figures? And they can challenge you and all the rest of it, but that's another story. But that would give us a handle on, we know, give or take, we're in a fairly good position if we can get between 10 and 15%.
What's the main area of upskilling you think is needed for advisors doing this? Is it the communication skills? Is it the technical skills? What do they need to be armed and equipped?
Interesting. I mean, I personally believe, and I might get shot down for this, but I do think that how advisors are coming across, what comes out their mouth effectively, is really so super important. And you can have all the tech in all the world and it can be as glittery and wonderful as you like, but if when you speak to a customer it isn't going into their minds, they're not really being asked the right questions, they're not being asked at the right time, ultimately, the advisor is influencing, I believe, about 80% of the outcome. And so therefore, yes, there is knowledge, there is experience, there is the tech that we're using, all critical parts to it, but overriding it is how the advisor positions it, how the advisor comes across.
What if technical knowledge is the gap? At what point do guys at MAB go, you know what, I'm not sufficiently qualified for this, it needs to go somewhere else?
Well, that's when we would run, and we do run, all sorts of master classes on different specific areas. Things have got more complicated as time's gone on, but that really means advice is more and more important, doesn't it, I guess? So, We'll run masterclasses on all sorts of things. So not only how you position protection, but maybe it's on trusts, maybe it's on the technicalities of income protection, critical illness. We run masterclasses on how you actually design solutions. We talk about protection portfolios. Going back to your other point, it's really important that we're not just backing one horse. We don't know what might happen, if anything, to the customer during the life of their mortgage. So to say we're going to put it all in on the critical illness horse or all on the family income benefit horse or the IP horse isn't right. We're trying to, within the customer's budget, design bespoke solutions. And that's another KPI that we look at is what does the design look like for that customer? Is it relevant? And are we trying to, as I say, back as many of the future risks for that customer as we can?
Are we moving to a stage where these conversations might become compulsory, that it's actually going to be best practice in the industry that you cannot get a mortgage without talking about mortgage protection first?
Well, we've sort of introduced that ourselves. We've made it compulsory for our advisors to, in every instance, talk about protection, and we monitor that all the way through. And if a customer declines to talk about protection, and if there's too many customers saying no to an advisor about having that conversation, that flags up in the system. We've actually got now a customer care team that contact those customers to reintroduce it back to them. And lo and behold, we get around about 40% of those customers that appeared to say no to the advisor say yes to us over the phone. And then we pass that customer back to the advisor and say, guess what? They've now said yes. So I think, does the industry move to being to having it compulsory? I think it should be, but it hasn't. So we've just introduced that conversation, ourselves, because you think about it, we are arranging, probably 100,000 mortgages in a year. That's an enormous amount of debt that we're helping people to arrange to buy the home. But surely it's our responsibility under TCF to ensure that customer's had a look at the risks that are in front of them and made a conscious decision to say yes or no as to whether that should be protected or not.
And it's a really nice note to leave things on a nice and optimistic one. So thanks so much again for coming in.
It's an absolute pleasure.
Thanks very much for watching. You can find more videos, blogs, head-to-heads and technical resources on our Protection Zone. Just visit the Money Marketing website and you'll find it there. I've been Justin Cash, editor of Money Marketing. Thanks for watching.